Okay, we've had a month and a half of red with the stock market down. And now, what do we have? We've got a week of straight up green. So, hey, what's everybody doing? Everybody's got FOMO. They don't want to miss out on what's next. But hey, is the stock market really going to skyrocket next week? Or are we going to have a pullback? And should we sell everything and take it off the table and wait for that pullback and then put it on? Well, in this video, I'm going to talk to you about that. There's a few different factors that we want to consider. And definitely the answer is no, we shouldn't sell everything. We want to stay in the market because I do. I don't know. Let me know in the comments below if you think we should as well. But to me, I'm long-term bullish in the market, but I recognize the short-term risk. We've got geopolitical risk with China and Taiwan and the Gaza Strip and Russia and Ukraine. So there's a lot of risk. There's still recession's not off the table. And the big thing that's going on right now is the tariffs. And has anything really changed? We've got deals in the works. We're talking about it, but do we have those deals yet? No. So we've got to be careful. But historically, getting out of the market and trying to time it long term has not worked. And we're going to talk about why and how we're going to play both the long term bullish trend and make money on that side. And if there is a pullback, no problem. We're going to make money on the short side as well because we're going to play both sides utilizing options. So in this video, you're going to learn why you don't have to pick a side and say, hey, what's going to happen next week? And what we're going to talk about as well is three different things. We want to trim our winners right now. So anything that we've made big money on so far, we want to take 20, 30% off. That's what I'm doing. And we want to invest on any pullback in any long-term recession-proof companies that have recurring revenues, recurring income, and aren't exposed to tariffs. So companies like Microsoft, Palantir, and then we want to DCA both sides. So any pullbacks, we want to buy those leaps. Any real run-ups, then we want to sell short calls against those. So let's jump into it. We're going to talk about the economic factors right now, interest rates, the different sectors, how they're performing, and then we're going to jump into the trades on the live option trading platform. Be sure and hit the like and subscribe buttons down below. Download the free options workshop in the link below. It talks about the benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research. You're the one taking the risk. You've got to do the ultimate risk. Okay, guys, let's look at last week. This is the spider sector tracker for the last 5 days. And look at this. Everything was up. Energy was down 0.5%, almost flat. But wow, look at tech up almost 4%. Communication services, so all the Mag 7. Real estate is even up. Wow, everything. But year to date, we've still got consumer discretionary down quite a bit and tech down quite a bit. So we've got room to run. But you can see the fear and greed index jumped up to 43. We just last week were in extreme fear at the start of the week prior to some of the numbers coming out. And as you can see on the economic reports last week, what happened is we had the PCE come out, and it was pretty much in line. 2.2 expected. It came out at 2.3 down. The Fed's goal is 2%. We want to make sure inflation's in check so that we can lower interest rates. And it pretty much gave the okay that, hey, we're not entering a recession. Jobless claims were actually pretty good. Actually, no, they were a little bit higher. 225 expected, but 241, but it wasn't crazy. So the market reacted well, and that was the reason for the move up. And next week, what do we have coming out, or this week? I'm making this video on Sunday. Market opens tomorrow, Monday, and we've got Fed Powell speaking Wednesday. Now, we know the latest, Trump was all over him for not lowering interest rates last time. He's concerned about inflation, so he's trying to hold off as long as he can. And then We've got jobs coming out Thursday, but Wednesday's the big day, I think. And then if we look, we're at 4.25 to 4.5 on interest rates right now. Next month in June, still expected to stay. So with the Fed, unless anything changes, it sounds like he's going to stay paused next month, and that's what most people think. And then with the first quarter point cut coming in July. But keep in mind, guys, we still have July and then another one expected in September. So we're at 3.25 to 4 at that point. And then, it's even another one in October, 3.5 to 3.75. So they've got three. This Fed Watch tool's got 3 interest rate cuts coming in before the end of the year. And, that's what the administration and Trump is pushing for. The Fed is looking to delay that. So I'm expecting maybe 2, but I don't know. Let me know what you think. But that's going to help all our tech stocks going forward. So let's jump into the live trades on the option trading platform. This is the Tasty Trade platform. Extremely intuitive. There's a link down below. There's benefits if you go through my link. We're going to go through each of these trades. There's quite a few. I may not go through them all, but we've got earnings coming up. So the way I've got my watch list set up, I've got it alphabetical right here, but I can go right here and sort by earnings, and then we can see next week the ones that have earnings that I've got on. And you can see Hims, Palantir, Upstart, AMD, Uber, Novo, EMR, Affirm, DraftKings. Now, guys, just so you kind of look at my notes and what I go through, this is my option tracking. And the way that I do it, I've got the stock ticker, I've got the fundamentals, some notes on those. I go through this every week. I haven't actually gone through it this week yet, but I'm going to go through it right after I make this video. But it hasn't changed much. The stock's moved up a little. But Airbnb, we've got the actually, wow. Hang on. I got to go back. Okay, here we go. We've got price, IVR, earnings, date. So I want to be aware of that. And that's on the platform as well. I've got support and resistance, and we broke through some of that resistance last week. The fundamentals, the PEs, the PEGs, the annual growth rate sometimes. And then the macro trend. Actually, we just moved. You saw, I just covered it from extreme fear to fear. And the 12-month range. So I always want headroom on anything I'm going long on. So I want it to be able to move up. And then the earnings history. So the last 3 times that they reported, last 3 quarters, did they beat or miss? And I want strong stocks that have beat and have buy ratings. And then the 1-year target price, and then my strategy, and then some notes on the stocks. So kind of gives you an idea of what I do. And so let's jump into the trades. Airbnb, I've got a poor man's, or no, what do I have? I have a leaps option on. And I am looking to sell a call in June. So we don't have earnings. And if we look at the chart, I've changed up my chart. I took off the RSI down below, and now I've got the Bollinger Bands, because the Bollinger Bands basically do the same thing as the RSI. If we're at 70 RSI, we're up near the top of the Bollinger Band, but it just tells you the range that it is trading in recently, and based on volume and time frame, and we're above the midpoint. So the higher it is, the closer it is to the upper band, the more it is overbought. If it's down lower to the lower band, then it's oversold in the short term. But again, I want this 50-day moving average, the green, to be above the 200-day and the red in order to really be long. But again, I think we've hit bottom or close to it, and that's why I'm trading both sides. And that's my strategy in pretty much all these stocks going forward. We've got the leaps on, and I'm looking to sell a short call. So hopefully we have an update on Monday, and I can put on this call at a better price. But you can see I've got it above the market at $8. Good till cancel. I'm looking to collect $265 and go to the $135. So $10 more on this leaps option. Affirm, they do have earnings next week on the 8th. I've got a poor man's covered call, so I'm playing both sides So as long as we're at 52 right now, as long as we stay below that 60, I collect this $330 over the next 47 days. And then I'm also going to take advantage of the leaps. So if it moves up next week and test my $60 call, excuse me, I'm trying to get rid of this cough. Then I can always roll it up. But we're in good position on a firm right now. I like it long term. AI, same situation. I've got the deep in the money call and two short calls against it. AMD, where are we at with AMD? Actually, let's look at, they've had 3 beats and it's buy ratings by the analyst. I don't know why AMD has been hesitant to move up. It's actually trending down still, but I don't know how much further down it can go. But again, we're making money on both sides. You can see I've got the calls. So I've been selling calls against it, but at some point, they're second only to NVIDIA in the chip stocks for AI, and they're going to skyrocket up. So on the 6th, I expect they're so far down, it can't be anything but good news. But notice, I'm not trying to predict what it's going to do. I've still got the short calls on the 105. But if there is a big move, then I'll just roll that up and collect on the leaps. And I may even Monday put on another, buy a leaps and push a little long, considering where it's at right now. But actually, you know what? I've already got that on. I was going to buy one at 90, but I'm still selling the 105 against it. So, hey, there you go. I'm not trying to predict the market. Amazon, 195. I'm long Amazon. They've been, they're a dominant player. My target for Amazon is like 250, and these are the 1-year targets, but they beat on the top and bottom for Q1, but their AWS was a little bit less. They got it a little bit less than expected, but they're still killing it. They had to move up just last week, like everything else. But long term, AWS, I'm just doing put spreads because it is an expensive stock. I'm not doing the leaps in it, but you can. APLD, Applied Digital, I've got 3 calls against it. These guys are great long term. In my opinion, it just needs, it could double easily to 10. They've got contracts with the big guys, and it's cloud services for high performance computing. Avago, one of the best AI chip stocks as well. They've got earnings 611, so we're in 620. So that's going to be before the move. So we'll see what it does, but we're right in the middle of that range. We can go to the trade page right here and then curve mode. This is what I like about the Tasty Trade option trading platform. And you can see the profit zone right there. As long as we stay in between our short strikes right here of 185 and 230, we make the full max profit. And P&L expiration is $650 that we've got left in Avago. And actually, it should be 425. It's showing here. So, but to me, Broadcom is a great long term. We're up now near the top of the Bollinger Band, but I'm neutral. So trading both sides. But love it long term. Dell, same situation, long term. Now, guys, because we've got these leaps on, I don't have to worry. Like if I have put spreads on, if there's a big downturn, you can lose the total. So like on the $10 wide, I could lose $1,000, but I've still got the money that I collected from selling that put spread. So if it was $300, the most I would lose is $700. But again, Amazon, I'm not too concerned with. So I don't know. I'm kind of jumping around, but that's how it works. But with long-term options like leaps, I don't have to worry about timing the market. I'm going to make money on the calls and then on the leaps long-term and then the short-term calls against it. But we're coming up against at 94. We're coming up against my 95 short-term calls. So I may have to roll that up, but I'm not worried about it because I'm making money on the leaps at the same time. But these guys, as that data center builds out, they're going to really do well. There's a possible server deal with Elon, I know, and others. But they've what do they have as far as they've got 3 beats and strong buys. And when I talk about this, the 3 beats and the strong buys, all I'm looking at, guys, pretty much you can find this on Yahoo Finance. So let's go to Dell right here, finance, punch in Dell. You can see the 1-year target 125. We're at 95 right now. You can see the 52-week range 66 to 179, so it's way up here. So there's a lot of room for it to move. We can look at the stats. These are the things that I look at. But forward PE 10, PEG ratio 0.73. So this is like an extreme buy for me right now. 3, if we go to analysis tab, 3 beats the last 3 quarters, and then the revenue and earnings all increasing, and then the strong buys and the buys. There's only a few holds. I don't think, there's no sells for the analysts. And again, you got to take the analyst ratings with a grain of salt, but this is just confirmation. It's more methods of confirmation, and that's kind of, what I look at, and I think the risk to the upside is a lot more than the downside. But again, I'm still trading both sides. So there we go. All right, DraftKings, same situation. We've got leaps with 2 short calls against it. And if you look over the last year, we've been killing it. I've gone through this before and showed you, but wow, I don't know why it's not showing me. This is incorrect. We've made thousands of dollars in over the last year in DraftKings. Yeah, that's not right. Maybe they are updating their software or something. I don't know. EMR 115, 105. They've got earnings next week. These guys are in energy. I'm not sure. I got to go back and see how I found this trade, but they're big for as the data center builds out. These guys it's a software company for customers in a wide range of end markets. They operate 7 segments, but it's basically it's for data center build out, and it's energy related. So I wanted to diversify, but super strong fundamentals as well. I remember if we look at the annual, you look at the income statement and the balance sheet, the ratios are good. But there's strong buys as well. If we punch that in Yahoo, and 5-7, they've got earnings next week. So we'll see. We've got 12 days to expiration. I need it to move up a little. We're just below the profit zone right now. But if we have a move up, I may close that out. I may keep it on. We'll see. Google 165. Okay, so I'm long. I've got a put spread. Google is obviously a dominant player. My target's 215. They're a monster in AI. They had earnings, and they're what did they do? My target's 215. They've had 3 beats on a buy. I've got to look and see what they did last week, but I'm sure that they did good. Let's see. But they've been moving up. So again, long term, I'm not worried about it. 215 target. We've got a leaps and a call that we sold against it at 170, and then a put spread. Okay, HIMS next week. Same situation. 2 poor man's covered calls, and at 45. So you can see I've got 1,000 here. Any down move, I'll just sell these 45 short calls and collect, my several $100s. And then I'm going to keep these 320-day to expiration leaps on, because long term, I'm super bullish in leaps. And right now, you can put on a leaps option for one of these for $900 and collect $200 monthly, basically. So you can pay it off in less than 6 months. But they've got a subscription model for healthcare for drugs. They're focused on hair loss, weight loss, sexual drugs, and mind health. So a lot of different sectors that are booming right now. But they've got extremely effective marketing. I think it costs just over $100 to acquire a new customer, and in 2 quarters they pay that off, and then they have recurring revenue with that customer going forward. So they're killing it. My target is a little bit higher than where it is right now, but it's had a huge run up just last week. Yeah, but keep in mind it was up here at 70, so I've got to up my target for HIMS. But this is one of those stocks that can kill it long term. So I'm just going to keep doing the leaps and poor man's cover calls. Hood, they had earnings. They're at 48 right now, and I've got the same situation. Calls against my leaps options, and yeah, they had a big move up last week. IonQ, so I'm looking to put these guys back on. I want to have a quantum stock on. Long term, it's huge. You can collect huge premium against this. So for $750, I can be long and sell short calls against it in IonQ. Sorry about that. Let me see what my target for IonQ is like 40, and we're at 30 right now. But I'm always going to have a poor man covered call on at this stage, and you can see there's huge room to move up to 52. But if you look at these short calls in June, you can go from 30, you can go out to 40 and collect $169. You can go to 35 and collect almost $300. And that's a and then still profit on the $5 move up in the stock price. So the premiums are huge, and that's why poor man's covered calls, you can kill it in IonQ. JP Morgan, I've been profiting on this. We've got 12 days left, and I've got $322 left. I've got 2 sets of iron condors on, and it's been trading in a range, staying right between my range. If we go to the curve mode analysis, again, Tasty Trade platform, we're still in that profit zone. I'm confident over the next 12 days it's going to stay within that profit zone, but hey, we'll see. If not, I just close out and roll to the next month. But this is the best banking stock, I think, long term. L3, 220, 230. It's been moving around a little. Not super liquid, but I want a defense stock. I'm long-term bullish. Mara, they do have earnings next week, I believe. Let's see, 5.8. So we'll see what they do. They're at 14.5 right now. They're down, but again, another one like IonQ, they've got pretty big premiums. So on this 15, if we stay below 15, I collect $300. If not, I just and then I sell those off if it moves down, if they don't hit earnings, or if sometimes they can hit earnings and the stock price drops. But long term, I'm bullish on Mara, a crypto mining company, and my target is much higher. They've had a 9 to 30 12-month range, and my target's 20, so it's still that's high compared to a $14 stock right now. So I like this as well. But you can see, guys, the poor man's covered calls. Put spread in Marvell. I don't know why this is still down. Great chip stock in AI. I'm taking off all my drawings these days. I like a clean chart. But you can see, I don't know how much lower Marvell can go, but I'm long-term bullish. We're still in that profit zone right now. They've got earnings the end of the month. Microsoft, this is one of those recession-proof stocks. They had a little bit of a move up. We've been making money. Again, long-term bullish. My target for Microsoft is, I think they're going to continue to do well. I think I'm up around $500 target. Yeah, 500. And again, they've got recurring revenue. They're going to do well and survive. They don't not affected by the tariffs. And I mean, you probably have it as you're watching this video. You probably have a Microsoft Office that you pay for annually, and mine automatically renews. So it's just recurring revenue. I think most people have that. MicroStrategies. I'm bullish on crypto right now. these guys they had earnings, they missed, and the stock went up. And that's because MicroStrategies is not at all tied to their small software that they provide. Michael Saylor, the CEO founder, is I think the largest owner of Bitcoin, and they're just tied to Bitcoin. And the target for these guys is 500. They're at 394 right now. And we've been kind of printing money, just trading put spreads. That's what I'm going to continue to do. ServiceNow, I'm getting up near my 1,000 call side. But if we look at the Bollinger Band, yeah, it's near the top. So I don't want to take that off right now. Again, we may have a pullback in the market next week. But at some point, we still got 47 days to go. So I'm going to leave my call side on. But we've been doing well in ServiceNow. At some point, I'll roll that out and recenter, but we've got a long way to go, and we'll just collect premium. NVIDIA, poor man's covered call, 114. Wow, they've kind of a flag pattern, but I expect a move up. I think it's undervalued right now. Novo, they've got earnings next week. These guys I love this stock right now. I've got a 100 price target. They're at 69 right now, so I'm doing poor man's covered calls. Pipeline of solid drug stocks. I think this is the best drug company right now, other than Hims. I love these guys and Hims going forward. And let me go back over. And then, of course, Palantir. These guys check all the boxes, but they've got earnings next week on tomorrow after the bell. So am I putting anything else on? No. I've got 2 leaps and 2 calls against it. So I'm not. Oh, no, I'm not. I said, oh, no, I don't. I've got a put spread, 185. So I'm okay with that because I don't think it's going to drop to 100 no matter what, even if there is a pullback. I mean, it might. But then I just roll out to June, the put spread, and collect more premium. But I've got a poor man's covered call, and I've got a 130 call. So we've got a little bit of room to the upside. But here's the thing with Palantir. Top of the Bollinger Band, everything's great, recession-proof, defense and commercial. But how high can it go? I mean, my 1-year target for Palantir was, I think, 130. Actually, it was 125. I got to up it. But these guys, I think they're going to be at 200 in a month, or not in a month, at the end of the year. I think they're going to be near 200. But do I think it's going to go straight up? No. There's going to be a pullback at some point. So is that next week? I don't know. But what I'm doing is that short call. What I'll do if there's a pullback is I'll close out the short call, and I'll buy another leaps. Out. If it drops to 105, I'll buy the 100 leaps out in March, and then sell a call against it at 115, something like that. So I'm going to see what happens Monday, since I've already got a position on. And, if I was really aggressive and wanted to predict the market, I would take this off right now, wait for the pullback if I thought it was going to come down, and then put on a leap. But I can't predict the market. But long term, I know it's going to do well. So I'm going to see what it does, and then I'm going to add to my position. DCA, right? PayPal, 68 short call against my leaps. These guys still control a lot of the online payment. They've had a pullback. I'm extremely bullish long PayPal. SoFi, they had earnings. They crushed it. Still at 12, but hey, I'm going to hang on to my leaps long term. I don't really, sometimes if there's a big move up, I'll sell short-term calls against it. There's not much in them because it's such a low-price stock, and I don't want to cap my profits on the move up. Sound, same thing. If there's a big move up, I'll throw on a call, but big move down, I'll throw on another leaps or a few leaps. Tesla, I'm long-term bullish. We're at 287 put spreads. It's an expensive stock, so I don't do leaps. I'm looking to put on trade desk on any pullback, but if you look, oh wow, it's down. No, I'm going to put that on. Yeah, I've got it on. So I'm going to do a poor man's covered call in trade desk, and these guys are super solid. I haven't traded it too much, but they sell cloud-based ad. It's an ad platform, and I mean that's huge. Their financials super solid. So yeah, I did my research on that, and I definitely want to get a position on in Trade Desk. Uber. What do we have in Uber? Poor man's covered call. We sold the 90 against it. We've got room to move. Earnings on the 7th, so we'll see what happens. But they at top of the Bollinger Band, so we definitely want to have that call side on in Uber. And then last one, Upstart. They've got earnings as well. 2 poor man's covered calls. This is another one. Upstart, as interest rates are cut, lower rates will help as there's going to be more loans. These guys help companies with loans. Let's see if we go about Upstart. Company's platform includes personal loans, automotive, retail, refinance loans, home equity. So they're similar to a fintech. They're like a fintech, like a SoFi. But Upstart is huge, and love the poor man's covered calls. All right, guys, let's review. There's 3 things that we want to make sure that we do right now. We want to trim our winners. So 20, 30%, I'm taking it off the table in anything that's done really well at this point, and having that cash on the sidelines in order to put back in the market. I want to invest in recession-proof companies with recurring revenues. So companies like Palantir, HIMS, SoFi. And then number 3, we want a DCA. So any pullback in these long-term plays, Microsoft, then we're buying more leaps. And again, I'll always do the short-term call to do the poor man's covered call in order to bring down that cost basis as well. All right, remember to hit like and subscribe down below. Download the free options workshop in the link below. Leave a comment, ask a question, let me know what you're trading. Thanks for watching. I'll see you in the next video.